Hi everyone, Ron Insana back again. I'm the CEO of iFi.ai. I thought I'd offer maybe just a quick tutorial or at least go over the assist that we offer you from an artificial intelligence perspective for trading individual stocks and ETFs, and just a quick look at how you might want to take advantage of the 1 and 30-day forecast that we offer in this model. Something that I think is maybe a necessary conversation to have because there are a variety of options in ways in which this can be used. You can, of course, use our best ideas, which you see on the left-hand side of the screen once you log into iFi.ai, which, by the way, the URL is i-fi.ai. You'll end up on the Explore page once you sign up as a registered user, and it'll show you, of course, the top 4 ETFs that are popular among traders and investors. We also have our best ideas that expand through all nearly 3,000 stocks that trade in the United States. These are our top 7. You can go through the list until you start to see some that are expected to go down, as well as those that are expected to go up. We also have a feature called Popular Stocks, in which you can see effectively the Magnificent Seven and how they're performing, what the forecasts are for those. Talked about Tesla in the past. Let's take a look at Google, for instance, which was getting hit as a result of disappointing quarterly profits. And it wasn't so much that they missed on earnings or revenues, but their YouTube advertising did not really deliver what was expected. And so as a consequence, Wall Street was disappointed in that. Now, our 30-day forecast is looking for a 4.79% decline. Turns out that the stock is down almost exactly that much in a single day. So there's a chance that if you were short the stock or you bought a put, you might want to take some profits here, given that short-term trades, of course, are treated as ordinary income and not necessarily as a long-term capital gains, as you understand. Now, you can also take a look at the graph to see exactly how our forecasts have tracked with the performance of the stock, and you can do that right here and track this. And you can see that with respect to Alphabet, been doing a pretty good job, and right now the stock is a little bit underperforming the forecast, even though we have a downside expectation over 30 days of 4.79%. Again, the bulk of that was hit today, but you can see that gray line in the middle of the screen is the AI forecast that iFi produces, and then the green line is a high expected rate of return, the yellow line the lowest expected rate of return, the blue line is the actual performance of the stock. You can also go back if you'd like and get an AI generative summary of why the model is suggesting these forecasts both on a 1-day and a 30-day basis. This AI generative summary reads out right to you and explains all the various signals that go into these forecasts so that you can come to understand that. So in the case of Google, that's what you get. The forecast, of course, we've seen already, and it is one that has been instructive and one that is being met even as we speak. So you can see the degree of confidence, 82%, the historical accuracy, 90%, suggests that the stock was most likely to meet those expectations based on all the various indicators ingested by our AI models, which sit on the Watson X platform. So just wanted to bring you up to date on that, show you a different example of how this may well be used. I've talked about other stocks in the past. You can go through this on your own. You can, of course, go through our screener as well, which has an entire list of stocks, all of the stocks that trade publicly in the US, from those that have the highest expected rate of return, the highest degree of confidence, the highest accuracy, to those that have the least. So there are a variety of different ways in which you can use this. You can also, of course, as you know, build your own watch lists, and you can screen in any manner you like as you go across these various navigation bars at the top to determine just how you may want to use the iFi assisting tool in your everyday trading, whether it's 1 day or 1 month. This, we hope, will help you make more informed, better trading decisions over time. And so that's what I have to say about that. We're going to come back and have a future conversation about more individual issues, about ETFs and other ways in which some professional traders may want to use services like these, particularly when you see things like a very wide spread between the lowest expected rate of return and the highest. That could suggest other strategies being used, but we'll leave that for another day. For now, have a good day, and we'll talk to you soon again.